Thank you so much. Good afternoon, Europe. Hello, world. Good morning, USA and America, and good evening, Asia. And welcome to our panel discussion. I will be the moderator. I'm Laurent Marocchini. I'm head of innovation at Société Générale in Luxembourg. I'm also blockchain leader for Société Générale Group. Today, the theme of our panel will be crypto and DLT in financial services. So it's definitely a very broad topic. We have a lot of discussion around the topic. On the first hand, I would say crypto. So as you have seen, the crypto industry is booming since 6 months. If you just take the example of the capitalization of the crypto, it's about 2.1 trillion of US dollar. If you are taking the example of the capitalization of Bitcoin for the crypto, it's about a bit more than 1 trillion of US dollar. So it is equivalent of the 4 banks around the world. We see a lot of projects with the central bank digital currency and the different stablecoins. So the crypto world is definitely booming. On the other hand, we have the blockchain, a lot of premises, a lot of application in the financial industry. 45% of the different application of the blockchain and the DLT, it is for the financial services. And we have seen a clear change in the last 2 years with the development of the security token offering. So blockchain is definitely here and it is definitely here to stay. So to discuss about the different topic about crypto and DLT, I have with me 4 experts, and I suggest to make a quick introduction of yourself, your name, your company, and your focus of blockchain. So I suggest to start with our lady.
Thank you. Thank you, Laurent. Yes, so good afternoon all. My name is Kim Schneider and I work as a blockchain specialist at Rabobank in our blockchain acceleration lab. We make sure our organization is up to speed with blockchain and crypto, and we help in many projects on the blockchain part. The lab already exists for 5 years now, and in the beginning we were only presenting to our colleagues and exploring the technology, but nowadays our colleagues are also coming to us and knows where to find us for support on their propositions and see if blockchain can add value. We do lots of different projects, from identity to safe store, for example, your COVID credentials, till tokenization, where we explore the possibilities for carbon credits. And at the moment, I am focused on cryptocurrencies. We do not offer cryptocurrency services at the moment, but I'm making sure that we are up to speed with what's happening around the world. Also, like Laurent already mentioned, there's happening a lot. New regulation is coming. And also looking with pleasure to what the colleague banks in the USA are doing now with providing custody services for crypto assets. I chair our crypto boards, where we discuss together with compliance, legal risk, and also our KYC department, crypto-related topics. We create frameworks, guidance for the organization. And yes, of course, at the moment, our clients and colleagues have lots of questions since the market is rising and the institutional investment is growing. So there's becoming more and more work for me, which I think is a good step forward.
Thank you so much, Kim. Simon, floor is yours.
Yeah, Simon is fine. Yeah. So Simon Zeiter, Head of Digital Assets at Deutsche Börse Group. I'm looking after our activities around the digital asset and the DLT space. We have done some projects where we already launched a solution live, for example, HQLAX in Luxembourg that is productive since 2019 for collateral management service based on DLT. We are also invested here in funds DLT and having some activities there. And we have just announced a project that we finished together actually with GFT, so David as well, around the settlement of a security transaction on DLT that is actually leveraging and connecting to the existing settlement world, so to be precise, T2S. Our current focus is to build an infrastructure for digital assets, actually, that we want to integrate within our existing tech stack, and also to leverage our existing capabilities as a group in terms of access to liquidity pools and also providing regulatory services to our clients. We investigate crypto. We have the possibility via our cash markets team actually to invest already in crypto via ETNs. So you have an issuer of an exchange traded note that you can invest into via the classical roads. And we're also looking how we might have opportunities for more physical trading. Let's see.
Thank you. Darko?
Thank you very much, Laurent, for having us. My name is Darko Pilav. I'm based in Zurich in Switzerland, and I'm working at Digital Asset, where I'm on the one hand heading our Swiss office, and on the other, I'm the director of client experience engineering, which means I'm kind of straddling the business and the tech world. We at Digital Asset have created Demo, which is a smart contracting language, as well as kind of an application platform, a development framework that allows you to both capture and then also execute multi-party workflows, multi-party transactions. You can execute them on a number of underlying infrastructures, a number of different blockchains, DLTs, but also centralized databases, for example, which allows you to create a kind of a system of records that spans across multiple business units, multiple organizations, and still retains all the relevant properties that you would want to have, like privacy, data integrity, and things like that.
Thank you so much. David?
So I'm David Creer. I am the global DLT lead and crypto lead at GFT. GFT are a multinational technology services provider based out of Stuttgart, but we're now active in worldwide. We basically provide traditional technology services as well as innovation based services such as blockchain and AI and cloud and IoT. Lots of areas that we investigate into. We obviously do quite a bit of pure investigation, but you also have a big focus on applied technologies, how we can actually make these technologies really useful for our clients, and taking things from that next step from just being in the lab when we have our own innovation labs to actually using them in production with our clients. I'm originally from London, but I'm based in Barcelona in Spain, and that's where our kind of like innovation lab kind of started, but now it's spread across the whole of the GFT group. And we've been involved in blockchain and DLT in the blockchain and DLT space since about 2014. So we've done about maybe around 30 projects in total, of which of them, various of those have actually gone to production, and we're supporting them as well in productive services. So we've been in and around this area for quite a long time, and it's been quite a wild ride, and especially now, I'll just echo what Kim has said. Right now is such an amazing time to be part of this revolution that seems to be happening in the crypto space. It's incredible how much traction this is getting in both the crypto and the kind of like more traditional kind of DLT space. So really excited to be here and to be talking about this.
So thank you very much, guys. I can see that we are a very diverse group, from Spain to Switzerland to Germany to Netherlands, a bit of UK, David, myself, a bit of French, and Luxembourg, diverse also in terms of competencies. We have the bank with Kim and myself. We have the tech providers. We have the infrastructure. So it will be very rich. So guys, I want to start with a first question related to the crypto asset. So Bitcoin, Ethereum, central bank digital currency, stablecoin. First question for the bank, Kim. What is your opinion regarding crypto assets? It was a bad word 4 or 5 months ago. Has it changed? Do you believe there is a future for Bitcoin in the financial industry? Do you believe that CBDC will be definitely the catalyst? So what is the position of your bank and the financial industry about the crypto? more generally speaking?
Yes, I always think as a bank, we have a really negative, not our own standpoint, but they see us as cryptocurrency or crypto asset haters, to say so. And I really think that's not true. Already from the beginning, our blockchain team is also exploring cryptocurrencies. But because we are a gatekeeper and we have our duty of care as a bank, we need to be careful in how to offer those products where crypto assets are involved. But from the bank's perspective and also from my perspective, we see lots of opportunities. I think the institutional interest, of course, helps on that part, as well as changing regulations in the US. And I also saw Deutsche Bank is going to offer a tokenization platform or custody services in Germany. And of course, also the law changed last year. So that's really helpful. And in the Netherlands at this moment, the regulation is quite strict. But does that not mean that we're not looking into it and that we are embracing those new initiatives and that we see lots of possibilities? We're also working together with our payments team, for example, and looking into the world of central bank digital currency, stable coins. What is it and what can it mean for our business model? Do we have a role there? Do we want a role there? And since last year, of course, also in the space of decentralized finance, which is really a booming market at the moment. So I definitely see a future. I think banks need to figure out what their role might be if they want to take a role in there. And from my personal point of view, I hope so. And I really see a role, for example, also in providing custody services. I think that might be a really nice role for a bank to add on in this area.
Thank you, Kim. I fully agree with you. And indeed, we see a lot of corporate, mainly in US, entering in this field, like Tesla, like MicroStrategy, a lot of big fish also in the asset management, like BlackRock. And definitely, we need to understand, to assess, and after to act in a crypto world. So my question will be for Simon now. We spend billions in infrastructure in the last 10, 15 years. What will be your role in the future in a crypto world?
I think the role will definitely change. When we had some projects, what we always saw is basically you have this wish to disintermediate, and that's completely fair, because ultimately efficiencies will only be gained if we really get to the fashion of bilateral transactions, right? So that is not up for discussion. However, we have also seen that if you simply take away the intermediary, the responsibilities do not go away. And I think that's quite interesting then to see that people just say, for example, we had a transaction, I was back at Commerzbank, where we had a direct issuance and direct placement of a corporate to another corporate. And then they asked, like, who's giving us the price? Nobody will give you the price, because that was something that has been previously done via the intermediate. And so I guess, to be honest, there will still be services that are of value. And this can be, for example, the connectivity to liquidity pools. It can be the provision of data, for example, of reference data. It can be something like pricing, efficient matching algorithms, and stuff like that. And we have to translate these services and responsibilities into a distributed fashion, actually. We currently have central systems. If you look at part of our core business is the CSD, the Central Security Register. And now we have to see how this would translate theoretically, because legally we cannot yet, but if it will change, how can we translate this into a distributed environment, and provide a role of what we call and already have live for HQLAX as a trusted third party to exactly provide these services from an independent party that is not trading on its own infrastructure. And this is where I see our position and also our responsibility, because we currently have these connection of markets. And I think it's beneficial for everybody if we could leverage that even for the crypto world.
Thank you, Simon. Darko and David, do you have any opinion about the crypto asset, and what did you observe in the market?
Go ahead.
Okay, I mean, so so the funny thing is that GFT, up until, let's say, maybe about 3 years ago, we really didn't touch crypto at all, because the majority of our clients are on the banking side, and the regulation simply wasn't there in the majority of the world. What we've seen in the last 3 years is that actually institutional crypto has become a reality, and that's because of the changes in regulation at a local level and at a potentially Europe-wide level as well, in the future as well. So obviously on the crypto side, then you've got local regulations like you have in Germany, and then MiCA, for example, for stablecoins, and all of this is, and as Kim said before, in America as well, they're kind of catching up in terms of their regulations too. So that's what that's meant, is that in the last 3 years, we've gone from not really providing cryptocurrency services to being major players in this area. So it's been something that's really had a boom. It hasn't been something that we've been doing for the past 6-7 years. Really, we focused very heavily on DLT, and then crypto kind of came later when it was more or less legal. So that's one thing. And then another thing, I suppose, is that the projects that we've got, I suppose, 2 big projects we've worked on. So one of them is CustoDigit, and so we were the technology partner that helped to build CustoDigit. And obviously that's a great platform. It can be used for the custody of digital assets, so a variety of different digital assets, hot and cold wallets. It's got security benefits. And it's got a lot of benefits in terms of getting you off the ground very quickly. So if you want to be able to get your crypto bank off the ground very quickly, or you want to be an institutional investor and you want to get that off the ground, then you can. It's a good accelerator for you. But and then the other big project that we did, it was basically with a tier 1 bank, where we built the crypto exchange that they've released into production from the ground up. So we were using a hardware, a HSM effectively, that was specifically designed for this purpose, from a third-party provider. And then we helped them build it from the ground up. And the thing that these 2 projects had in common was that CustoDigit in Switzerland and this tier 1 bank in the UK, they both went hand in hand with the regulators. So they were working every day to make sure that they were the first people to release into production environments in their countries. And I think that's been really successful. It's meant they've been very successful projects. It's meant that they've been able to actually provide a real product, rather than just kind of like like a kind of preview to something. They're actually providing these services now in production.
Thank you, David. Darko?
So if you think about kind of what cryptocurrencies aimed at the core to do, was to a certain extent to behave like cash, to have certain properties similar to cash. And while kind of they are gaining momentum and kind of going in that direction, and also with the uptake of entities like Tesla that you mentioned before, Laurent, I still think there is a fair way to go, and there are a couple of technical issues that are preventing this kind of as an uptake as just cash. But also one big problem is also that it's still very volatile, so it cannot really be used as a store of value right now, because you never know kind of when you look at your account how much is going to be there compared to yesterday. So this is kind of one of the issues that are out there. But what is, I think, very important to see is how the cryptocurrencies and blockchain in this entire revolution, as David has mentioned it before, has kind of accelerated and spurred the thinking around various other topics. For example, CBDC, as you mentioned, Laurent, and kind of you also asked what we're seeing out in the market, and from the various conversations that we had with the multiples, with different central banks, it seems that there is a huge interest in central bank digital currency, but it also seems that they won't be kind of in the form of cryptocurrency, as in bearer asset and things like that, because of course you're then running into issues of regulation, etc., but things that the central bank definitely wants to, needs to be able to control. So I think there is a lot of exciting development, and also kind of generational progress between kind of from cryptocurrencies to other assets, to digital assets and central bank digital currency. It's really very interesting. One thing that I also wanted to echo what Simon mentioned before around the disintermediation. I think this is a very important point, that our stance, or in general, is that all the entities that are providing valuable services are still going to be required. They're still, you still want all those services because they are valuable. So these entities definitely won't be disintermediated. The only entities that won't have much of a role to play are the ones that are making an benefit, they're making a profit from inefficiencies and taking advantage of those inefficiencies. So if we get rid of those inefficiencies, the profit goes down for them. So I think this is the only place we're going to see disintermediation.
Thank you, Darko. And indeed, we see that 80% of the central bank around the world have a project regarding CBDC, and it's mainly the wholesale instead of the retail cryptocurrency. So now, going back, so taxonomy is quite clear. We have, on one side, we have the cryptocurrency. We had already such discussion around cryptocurrency. We have the utility token, and what is very exciting for the financial industry is definitely the security token. And we have seen since 2 years a lot of projects regarding the security token. And part of Société Générale, we have a digital platform called Société Générale Forge, an internal startup now. It's a company owned by Société Générale where we have made issuing of bonds in a public blockchain. But my question, it will change definitely the way we do business in the future. Simon, in terms of infrastructure, will it change? Will the infrastructure be ready in this case? And I think we have a question, not a question, and not from the audience. You are not in Wall Street. You are in Deutsche Börse. You are not the Wolf of Wall Street.
I will get some issues here internally if that's the impression. Yeah, no, good. But to your question, Laurent, what we are looking at when we have now, and we are actually discussing the architecture of this future infrastructure for digital assets really within our broad architectural teams. So it's really getting part of the corporate architecture. That's currently the goal. And what we see definitely in this kind of architecture, and I think Darko can relate here as well, is that flexibility is absolutely key, because you have currently a highly heterogenic landscape of systems and different networks, yeah, where securities are being managed. And so what we see is that we want to be able to connect to public chains in general as well, yeah, similarly as we have to connect to private chains. And of course, we'll also have our own network. And how will we connect that? The connection will be basically through the custody function, because an asset that lives on a public chain or on another permission chain is only living on this chain. You cannot pull it off. You cannot pull Bitcoin off the Bitcoin blockchain. It's not possible. But you can manage the assets through the custody function. And many people see the custody function rather as a only key management, which I think is falling short. But we see it rather as a connectivity component. So if we want to manage positions on our systems, even maybe within the current accounting system or otherwise within the network we are building on our own, then we have to manage these positions via connecting to the chains where the assets are actually living through a dedicated custody function. And this is the reason why the custody function as a kind of connectivity and access management capability is so critically important to us.
Thank you. Maybe Darko, if you want to add something.
Yes, absolutely. So I think this is precisely the area where huge efficiency gains are going to be achieved across the entities, and not only absolutely in the crypto asset custody, but also just kind of in general, the digitization of any kind of asset, be it on the currency front or on the asset front. And one thing that Simon has mentioned that is absolutely crucial: the flexibility to be able to interact and interoperate with many different other infrastructures, which lies to the core of the success of this, in my opinion. So this means, on the one hand, as Simon has mentioned, interfacing into the Bitcoin and Ethereum networks in order to be able to hold the assets represented there. But then also, if we look at digital tokenization of digital assets, we don't even know what kind of infrastructures necessarily these assets are going to be able to run on, or on which infrastructures they're going to be represented. So we need to be able to interoperate with a large number of possible infrastructures, so that you can transact atomically across those different platforms. And the atomic part is actually very important, because with that you are removing a fair amount of counterparty risk and the need to roll back transactions, etc., etc. So this is really an important part to it all.
Thank you, Darko. Kim, if we go back to the bank, of course, the security token will change the way we do business. So do you have any thought about that? Any use case you would like to share? Any sector you believe it will change the way we do business in the security token offering side?
Yes, well, of course, we did experiments ourselves with security token offerings to see what it means, at least also for our clients and also for internally. Currently, we also look into what kind of bank assets could we tokenize and what is the added value of it, because in the end you can tokenize everything and also create security tokens, but it has to have add value, of course. On the other hand, I see possibilities for our clients, especially in the small medium enterprise sector. I think it's a more easy way to raise money and to issue shares of their company. But I think still most of them are unfamiliar with the technology and the possibilities. So maybe banks could provide support on that part, or create issuing platforms, or maybe collaborate with existing parties and platforms. So I really think there are possibilities for our clients, and maybe also in constructions with providing loans, for example, that we provide them for a part with a loan, and the other parts can come from token offerings.
Yeah, so place for everybody, and a lot of partnership in the future between the incumbent and I would say the new world. David, any things to add? What did you observe in the market from your side?
Yes, so I suppose there's been like two areas, two projects maybe that in digital securities that I'd like to mention, and potentially kind of tie them together. And the thing that has been quite outstanding in these projects is their ability to be able to manage cash on chain. So the solutions that we have provided here have really provided like an end-to-end solution for cash on chain. So one of them is what we did with Simon's team in Deutsche Börse, and that was basically creating a transaction coordinator to be able to transact between e-money, which was being distributed by the central bank in Germany, and the transactions that were done on the Corda network in Deutsche Börse, and that basically offered services to be able to provide a DVP on top of for for primary market and also for a secondary market. So it's quite exciting. And one of the things that was quite exciting about it was the way that from the central bank point of view, that the integration was really done in a very, I suppose, seamless way, because it integrated with the Target 2 payment system, which was already in place. So that was quite it was quite an interesting take, because it meant that obviously the banks didn't really have to change too much to be able to actually go through with this. So that was very interesting. And the other project that we've also been working on is actually something that we did with DAML. So Darko, I'm sure, is aware of this. Where we basically worked with an exchange, and we were basically working on a bonds project. And this bonds project, in the end, it ended up grossing a lot of bonds over a year period. It's quite a high level of bonds, and that project provided huge efficiencies for the exchange through automation of a lot of processes. So it was an end-to-end project. So it automated all of the actual bonds itself, but also through the disintermediation that it provided for the exchange. So a lot of the intermediaries that were there in the original setup were obviously not needed in the experiment that was done at that point in time. And the global custodian that was also involved in this project provided a cash on chain solution that integrated with their accounts for their clients that were working on this. So all of the corporate bonds that were bought and sold on this were using real money from the actual custodian itself through this cash on chain solution that was produced through DAML. So it was quite exciting project, and I think that really having a good cash on chain solution is really at the heart of this security thing. It's what makes it real, effectively.
Thank you, David. So it was quite impressive to see your different projects. So if we go back to blockchain and DLT, so we used to say that blockchain is the solution to all our problems. In the reality, it's completely different, because you need to have a lot of prerequisites. So if we just have a look to the PricewaterhouseCoopers study that shows that in 2030, so in 9 years' time, blockchain will be able to boost the GDP by about 2 trillion of US dollar, mainly in trade finance first, in the payment industry, in the digital identity, and in the post-trade. So do you have a project to share, a use case that is really suitable to the blockchain? So who start first? Something to share that can bring value added to the client and to your company?
Yes, I can start. I'm not sure if you're aware, but we already have 2 platforms in the trade finance, so that are WeTrade and Comgo. And yeah, the blockchain part is there, like you said, a small part, but I think it's really of added value, because at least already for the collaboration between all those parties in the ecosystem, and that they can have their agreements with smart contracts, and it makes it more efficient, and it gives way more transparency. So I can imagine why they say it's for the trade finance area interesting to use DLT. On the other hand, I have a recent experience with carbon platforms. So platforms that are selling carbon credits. And some of them are also pretending to use blockchain technology and to be very transparent. But yeah, my experience was that it was not transparent at all. So you don't find where the carbon credit is coming from which farmer, or how much CO2 is in the credits. So yeah, it's hard to track. So I really think in those projects, yeah, a public blockchain will be of added value. So you can track the token, see where it comes from, and that it's of course also not double spent. So yeah, looking forward to initiatives in in that area.
Yes, definitely. So I'm very happy to see that we are together in the same initiatives with Comco and WeTrade, and definitely the trade finance is a sector where you have a lot of stakeholders like bank, like insurance, like the transporter, like the shipment, and so on. So it's definitely the way also to reduce the paper, because it is a sector where you have a lot of paper and you need dematerialization, you need transparency, and it's definitely a very good example. Other guys, do you have any project to present where you have seen the real interest of blockchain and value added?
Yeah, I can share something here as well. And maybe with regards to Kim's point, I think that's a very important point regarding the example of the carbon footprint. Many people think just blockchain or DLT replaces trust, yeah, like as a general statement. But that's not true, yeah. It replaces trust in the process in between different entities, but not trust in the content. So you can put shit on a blockchain, it's still shit, yeah. And so if it's a false and greenwashing content or whatsoever, it's greenwashing content on a DLT, yeah. With regards to the value add for our clients, I think HQLX is a quite good example that we have productive already since 2 years now almost. And in this example, we managed to allocate basically baskets of securities as collateral to our clients to fulfill on short-term requirements for collateralization. And we do this without having to move the actual collateral out of the custodians. And so this is a true value add, even though it's still to some extent a limited use case. It's not a revolutionizing use case, but it's a use case where there's definitely a value add due to the possibility to transfer ownership of these basket types, yeah, in fractionalized way even. That would not be possible in that speed when we would move it out of the custodians.
Thank you. Darko, David?
Yeah, so I wanted also to echo what Kim has mentioned, that for example, the entire market around the carbon footprint, it would be is an ideal example for that. Actually, anything where you have multiple parties that need to be interacting with each other, you can get some benefits out of it, and kind of the examples are numerous, be it on the post-trade side, on the settlement side, like the project that we're doing with the Australian Stock Exchange, or with bilateral repos that we're doing with Broadridge. So kind of there are, but also outside of the finance space, for example, an ideal use case would also be the medical studies management, if you get the privacy right. There are really a large number of possible good applications of it. But what I want to highlight here is that what I believe is going to happen is that the differentiation between a blockchain use case and a non-blockchain use case is going to kind of to disappear slowly. And what I mean by that is, imagine the following: you have a particular use case that you want to implement, but you don't really rely on any kind of, you don't need a distributed ledger for your particular use case. So you create implement it on your centralized database and go into production and are happy with it. And then a little bit later down the line, you see, well, actually, it would be really nice if I could link a certain part of my process atomically to something that is happening on somewhere else, on a different system or on a blockchain. And now, if you can interoperate with the other system, you are going to get precisely this. And this is what I mean by the differentiation between a DLT use case and a non-DLT use case kind of vanishing slowly, because you're going to get in the end the properties that you would want. In the end, we are not using blockchain, for example, just because it says blockchain on top. We use it because we want the properties that it gets, the integrity and the atomicity and all of these things. And if we can get them through interoperability, then we're going to use that.
Thank you, David.
Yeah, so one of the things that I think is very clear is that the payment space is very, very big in this area. And the reason for that is the amount of security that is needed in payments. So when you are making a payment, you're effectively making a peer-to-peer transaction anyway. And when we see that these peer-to-peer transactions need to be bolstered in security, then it kind of gets you thinking about blockchain in general. So it's not surprising to see that from a wholesale point of view, and even from a retail point of view, that we're starting to see a lot of either peer-to-peer payment platforms that are popping up, and also wholesale networks that are getting set up either via CBDCs or outside of that, to be able to create these kind of payment gateways that need this kind of trust between the people that are using them to be able to create payments. So I think payments has a massive place to play. And then the other thing is around, so kind of related to that, is around post-trade settlement. So echoing what Darko said previously, there's so much going on in that area. It's been so hot for maybe even the past like 5 years. So I think that we'll continue to see a lot more evolution in that area, especially because it is driven by large exchanges like Deutsche Börse or the ASX, and they tend to drive innovation much more heavily to be competitive in their own market as well. So I think that we're going to see a lot of innovation in that space as well. And then the other thing is around CBDCs. So CBDCs will completely change everything. There's no doubt about it. Both retail and wholesale CBDCs will completely change everything. And the way that CBDCs are used by end users, or the way that they are connecting to traditional banking services, is going to have a big effect on the market. And obviously, crypto and DLT will have a lot to do with that. So that's probably my 2 cents on this area.
Thank you. Thank you so much. So I have a last question, and I will take just after the different question from the audience. For my last question, I can already merge with one question from the public. My last question is more the crystal ball question. So we are in 2025, so just 4 years. So where do you see the bank using DLT in 2025? Do we still need a bank in a decentralized finance? So what will be the role of the bank in the future? What will be the bank of tomorrow? So this is the crystal ball question. 2 minutes.
Is it only for me?
No, for the tech guys, for Simon too. So I can take advantage. I am a bank, but I am the moderator. So for me,
well, I'm curious what the rest thinks.
So,
go ahead.
Okay, thanks. So I think that by that time we are going to see uptake for CBDC, and as David has mentioned, this is going to be a significant game changer, because then when you are transacting on anything, you are able to immediately transfer money and not liabilities, and this is going, and particularly if you think about integrating this capability not into a vast number of different potential use cases where you would use money, and this is precisely the point. You are using money everywhere. Another point that I want to mention is kind of similar to the point that I mentioned in the last question about the differentiation between distributed ledgers and non-distributed ledgers kind of vanishing. And I think over the next couple of years, we are going to start to reduce the amount of conversations about the specific different infrastructures and focus more on the use cases that are being used. Because in the end, if you gain true interoperability, you don't really care about what is the technology that is supporting this. Similarly, like we everyone on this call, we didn't think about, well, who is actually my provider, who is your provider, how are we actually going to connect to each other through the internet, but rather we have a particular use case, and we just kind of use this virtual global network. And this is exactly what I think we are going towards, a virtual global network to orchestrate workflows and processes and transfer value.
Thank you, Darko.
I would add on what Darko said a bit, because I think I keep the point regarding the responsibilities. Yeah, you can try to take away the banks, but you have the responsibility for private clients still to safekeep your assets, to do asset servicing, to do maybe something like taxation and stuff like that. And if everybody wants to do that on their own, feel free. You can also store your pile of cash under the pillow. It all works, but don't be afraid if it's gone. And it's the same for crypto.
Yeah, I fully agree with you, David and Kim.
So maybe I can make a comment a little bit on from a kind of technical point of view, and I completely agree that the banks are not going to disappear at all. I think that the idea of a peer-to-peer payment system, as I mentioned before, isn't going to be the future of money in the end. I think that the banks will always be there because, as you said before, there is a responsibility, and the people want people to be responsible for their money. They don't want to have complete responsibility of their savings. So I don't think the banks will disappear at all. I think they'll get more involved in this area, much more so. But purely from a technical point of view, and this is kind of along the same lines of what Darko was talking about before, I think that we'll see the use of DLT and the use of programmable money being kind of more easily accessible, and in that way, through the use of highly scalable solutions, like for example Canton that DA has, and through the use of huge either multinational or regional networks like the BSN, which is one of our partners, Red Date's network in China, or EBSI in Europe, that we're going to see a kind of like omnipresent DLT, which is going to be a lot cheaper to use and a lot more easy for people to start using as well. So rather than it being kind of like this complex setup of like, okay, which platform do I choose? How do I do this? Do I need to go to a specialist to be able to do it, which is what you have to do at this point in time. At some point, we're going to get beyond that, and it's going to become a kind of like somewhat ubiquitous in terms of the technology that you choose to use.
Thank you. Kim, do you have any vision of the bank of tomorrow? Client first.
Yes, I really think I really agree with all that has been said. And I also saw one of the questions that, do we have existence, and why should we as a bank provide platforms or products with DLT or crypto? And I really still think, we have a mean of existence there. I think clients are willing to use products from a bank still. Not all of them trust the banks, I know, but I still really think a lot of them are trusting us as a bank. And I also think our clients are using those products. So I really think in line with that, we should, collaborate and participate in this field.
Yeah, and maybe I should just say something. Banks know really well how, and exchanges know really well how money works, right? So who better to be able to model the DLT processes of the future than the banks and the exchanges? I mean, there's a lot of interesting kind of processing that can be done from that, and it makes a lot of sense for me that they would be leading this area, and I think we're seeing that at the moment.
I think it goes even kind of beyond the point that kind of bank and exchanges know their stuff well and are providing valuable services, etc. For example, if you think about anti-money laundering, even if we are talking about central bank digital currency for retail purpose, there would absolutely still be a requirement for banks, for the customer interaction, for the services, for the different applications, and then also for a regulatory perspective for anti-money laundering and KYC, know your customers laws, and etc. So these things are not going to go away. They shouldn't go away, and most central banks wouldn't want to take that on for themselves and kind of do all of these customer-facing activities by themselves. So even in kind of the retail central bank digital currency space, you would absolutely need and want to rely on banks.
Thank you, guys. We still have 8 minutes, so I'm also the time speaker. So I suggest to take some questions from the audience. First question is, when do you expect we can trade, not issue, so trade, so it will be the secondary market, shares and bonds in a blockchain in real time? Maybe Simon can share his thought. Simon, when do you believe it will happen for STO? But I suggest that it's already the case for me, the issuing. So
I mean, we are in so for shares explicitly, I would say it takes some time, yeah, because equity is a bit more complex than debt products. For debt products, we are already looking into direct issuance in one project. I can tell. So where we would assume that we can issue within 1 hour. This is a part of a project that we're currently running. For shares, I would say this can still take 3 to 5 years, maybe, to be honest. Yeah. Simply because also the administration of equity is a bit more complex than most debt products. However, the debt products that we're looking into are retail structured products, and these are already quite complex in terms of life cycle.
Yeah, I fully agree with you. For me, it's also a question of adoption of the market. So if you want to have a secondary market, you need to have adoption and more clients. So we see a lot of experimentation regarding issuing of digital asset like bonds, like wine. Real estate is quite successful. Equity, it will take time because you have a lot of regulation and you have the stock market. But anyway, it's a question of 3 to 4 times. We have a question to Kim. In which position and in which use case do you see chances for banks to earn money with crypto financial services? Maybe it's quite tricky.
Well, I think with providing custody services, that might be, of course, a business model for us. Also on the payment part, so we are providing ideal transactions at the moment, so you can pay from all the different Dutch banks, for example, with a small application, and it might be that the payment solution providers, for example, that are exchanging the money from exchanges to their customers, that we can provide them with services like that. That might be a possibility. And yeah, I think on the longer term, maybe on the decentralized finance, centralized finance opportunities on the savings part and also the borrowing and lending part. But yeah, that's for the future.
And the future is now.
I know. I'm working on it.
Yeah. So we have a lot of discussion regarding the role of bank in the future of DeFi, and banks will still have a place to play in the future. No worries like that. We have a question: is what is your view on the US printing more money and the risk it has on inflation? So it's more for microeconomists. Would you see the name in the crypto world? Bitcoin has survived the past 10 years growing by itself. Do you have any opinion about?
So I definitely want to give any feedback on policy, just kind of from a technology perspective. I would, for any kind of central bank digital currency implementation, from what we've seen so far, there is always the the critical requirement of the central bank being able to control the supply of money, which means that I believe in a central bank digital currency implementation, in a future one, the central banks would still have the sole authority about the amount of the currency that they are creating. So I think this would not change with central bank digital currency.
We also have, thank you. We also have question about regulation in Europe, mainly in Europe, and also about the pilot regime for DLT. Do you have any opinion on that? So pilot regime, MiCA.
Yeah, so I think so. I mean, that's going to have a big effect, and the reason that obviously they're putting MiCA into action is to be able to lock down on stable coins effectively, and that's stable coins and CBDCs are going to have a big effect on the market when we come to payments, and especially in the retail sector. You have organizations like DM, which have very very advanced in the stable coin area. In fact, GFT have done an integration in their lab for DM payments, and the EU want to be able to regulate this in a much more effective way, and that's really the reason for MiCA, to be able to pave that way for CBDCs and also for e-money and for stablecoins. So really, that's the main focus there. And then, I mean, at a local level, in each individual countries, you've obviously got some countries which are quite advanced. I mean, I think in the previous panel they spoke about this as well. So Switzerland has been extremely advanced in maybe the past like 3 or 4 years. Germany is now obviously issuing certifications to be able to allow digital asset processing to the banks in Germany. So GFT has been obviously very involved in this as well. And I think that we're probably going to see a lot of other local countries also taking those steps as well. I know that here in Spain, there are a lot of conversations, and in fact, there's like a regulatory sandbox that's been set up and is being used by banks here in Spain to be able to model these kind of flows, and that just means that the regulators are basically waiting to be able to put the regulations in place once the reg sandbox has been proved out. So I think that we're almost there, effectively, is the way that I say it with regulation.
You see, Victoria, I don't know if it is a good news or not.
It's bad news, but
it's bad news. No, I think that we are just on time. We are just on time. For me, I have tried to take almost 80% of the questions, so for me it's okay. We are at the end of the panel. A last question, a last word, just a word.
Yes, please go ahead. Last words, of course. Yes.
For you guys, last word. When it will happen? The adoption of blockchain will be for 2025.
Yeah, I think that blockchain, smart cities. I think that we're a little away from that. When the EBC is more mature, and I think that we're probably a good 5 years away from that. But I think that we're almost there in certain sectors, and I think banking is actually one of them.
Say a year.